Nobody is paying attention to this, but the global economy is running on a massive unspoken lie. Every corporate presentation, government budget, and retirement plan relies on one single comforting assumption: tomorrow will always be bigger than today. We expect steady, uninterrupted growth, viewing this trend not as a historical anomaly, but as a fundamental law of nature. But that assumption is wrong. Most people think our current economic jitters are just a temporary phase. We look at inflation, supply chain disruptions, and market volatility as mere potholes on an otherwise smooth highway, believing that once the dust settles, we will slide right back into the fast lane. But the truth is much more permanent. The engine itself has run out of fuel, and no one in power wants to admit it. The structural foundations that supported the extraordinary rise of the late 20th century are cracking under their own weight. For the last 70 years, humanity experienced an absolute gold rush. Strip away the complex financial jargon, and that entire explosion of wealth was built on two simple pillars. The first was a massive wave of new workers. This was the demographic dividend, a unique moment in human history where the ratio of working age citizens to dependents was heavily skewed in our favor. The entry of women into the formal workforce in Western nations, combined with the integration of China, Eastern Europe, and India into the global trading system, effectively tripled the global labor supply in a matter of decades. The second pillar was cheap, easily accessible energy. We discovered vast, dense reserves of fossil fuels that were remarkably easy to extract and refine. Every unit of energy allowed a single worker to perform the mechanical labor of hundreds of men, creating an unprecedented amplification of human capability. Then, something shifted. Governments began printing money at a pace that defied logic, and central banks lowered interest rates to zero or even into negative territory, desperate to spark that old familiar fire of organic expansion. And what did we get? We got speculative bubbles in digital assets, soaring real estate prices that priced out the middle class, and a proliferation of unprofitable startups. The financial plumbing was flooded with cash, but the real world grew sluggish. Factory output plateaued, shipping corridors clogged, and the physical materialization of progress seemed to grind to a halt. Most commentators looked at this and promised that the next big technological breakthrough, like artificial intelligence or advanced automation, would instantly spark a new golden age. But that hypothesis confuses technological sophistication with broad-based economic productivity. Data from institutions like the International Monetary Fund suggests we are not in a temporary slowdown. We are staring at a structural brick wall. To understand why, imagine economic growth as a tree. For decades, we have been picking the low-hanging fruit. If a company wanted to double its revenue, it just built a factory in a country where labor was cheap. If a society wanted to build a city, it just pumped more oil out of the ground. But what happens when all the low-hanging fruit is gone and the remaining fruit is at the very top of the tree, requiring expensive, energy-intensive ladders just to reach it? The first layer of this challenge is the global population. For centuries, the human workforce grew naturally, creating a self-reinforcing cycle of demand and supply. Today, we have crossed a demographic horizon. In Eastern Europe, East Asia, and parts of Western Europe, populations are shrinking. South Korea's fertility rate has dropped to historic lows. Japan has sold more adult diapers than baby diapers for years. And China's working age population is in structural decline. A consumer-driven economy cannot function when there are fewer consumers every single year to buy cars, houses, and electronics. To compensate for fewer workers, we tried to make existing workers more efficient through technology. Yet, according to data from the Organization for Economic Cooperation and Development, productivity growth across major economies has been steadily declining for decades. We have better smartphones, but our fundamental ability to produce more value per hour of work has stalled. The internet changed how we spend leisure time, but it did not revolutionize the physical reality of building houses, moving heavy freight, or growing food the way the steam engine or the electric grid did. We have optimized our software, but we are still bound by the rigid laws of hardware and physics. If we lack the people and the massive productivity gains, how have the GDP charts continued to march upward? We did it through an unprecedented mountain of debt, When the real engine slowed down, we simply hooked it up to a massive battery of credit, forcing the economy to grow synthetically by pulling demand forward from the next generation. According to reports from the Institute of International Finance, global debt has climbed to over $300 trillion, more than 3 times the size of the entire world's annual economic output. We are eating our seed corn to cook a grand feast tonight, hoping that tomorrow we will somehow survive without it. The larger the debt grows, the more servicing it eats into the capital that should be used for real, productive investment. Why do we continue to play a game that everyone secretly knows is unsustainable? The answer lies with the people running the system whose incentives are misaligned with long term survival. Politicians need the illusion of growth to get reelected. Corporate executives needed to justify quarterly earnings reports and secure bonuses. Central bankers need it to keep the commercial banking system solvent. Everyone has an immediate incentive to pretend that the party is going to last forever. The real explanation behind our current economic reality is that the system has finally reached its physical and geographical limits. We have globalized every supply chain that could possibly be globalized. We have urbanized billions of people and extracted the most accessible, high grade resources. The easy wins are over. From here on out, every single inch of economic progress is going to be incredibly expensive, energy intensive, and intensely difficult to achieve. We are fighting diminishing returns on a planetary scale. This leads to a profound implication. Our entire modern social contract is built on the premise of perpetual expansion. Pension funds require compounding growth to pay retirees. Fractional reserve banking systems require constant credit expansion to prevent widespread defaults. Social stability requires growth to act as a pressure valve for inequality. As long as everyone's slice of the pie is getting slightly bigger, no one cares too much if the person next to them has a slice that is vastly larger. If easy growth is gone, the rules of the game change entirely. The psychological foundation of our civilization shifts from optimism to zero sum tribalism. We are no longer talking about how to divide a growing pie, but about an intense, bitter conflict over who gets the biggest slice of a pie that stays the same size, or actively shrinks. This conflict will manifest within our own borders, splitting societies along demographic fault lines. It will be an unspoken war between generations, fought between the young workers who have to pay exorbitant taxes to support an unprecedentedly large aging population and the retirees who expect the financial and medical promises made to them decades ago to be honored in full. It is a mathematical equation that cannot be balanced without someone losing everything. We are standing at a crossroads that nobody wants to acknowledge. We can keep pretending that a magical tech savior will appear tomorrow to fix everything, using artificial intelligence to write code while our bridges crumble and our energy grids strain. We can continue to pile on trillions of dollars in synthetic debt to keep the fantasy alive for just one more fiscal quarter, kicking the can down an increasingly short road. Or we can finally face the reality that the era of effortless expansion is behind us and begin the difficult work of designing a society that can thrive in a world of limits. The data clearly shows that the world is running out of easy growth across every metric that matters. The real mystery is what happens to a civilization built entirely on the concept of infinite expansion when it finally runs out of room to expand. It is a question we are all going to have to answer sooner than we think. And right now, the silence from the people in charge is absolutely deafening.